of what we are doing, then we will come to the tax book. Okay, and we have created the asset categories, asset location, asset flexi fields. We have created the corporate book, and now we need to proceed with the creation of the asset category. As I mentioned that whenever you are creating an asset, you need to select your corporate book and category name. So now we need to proceed with the category name. Now in order to proceed with the asset category screen, okay, we should again first we need to proceed with something called depreciation method, because in the asset category you need to select the depreciation method. So we will see, I picked up two depreciation method. I have created one something called net book value method, and the other one is called straight line method. I'll explain you what is straight line method and net book value method. These are the two high level depreciation methods which are used by most of the clients. You can go for other custom ones or something called table, formula, and other things also. But at a high level, these are the major two depreciation methods which are used by most of the clients. So I'll explain you what is straight line method, what is net book value method. Okay, take an example. There is an asset. The value of the asset is 100,000, and the life of the asset is say 5 years. If you want to go for the straight line method of depreciation, you need to just have the cost of the asset and life of the asset. Straight line method, as the name itself says, straight. It's a straight or it's the same value over a period of time. So 100,000 is my asset. The value of the life of the asset is 5 years. So that means every year I need to depreciate this asset by 20,000. That means every month I need to depreciate this particular asset by 1666.6666. So you are depreciating the value of this particular asset every month by 1666.666. So if you do that for 60 months, that is 5 into 12, 60 months, then at the end of the 5 years, your value of the asset will be 0. Your cost of the asset will be 100,000, and your total depreciation for that particular asset at the end of the 5 years will be 1 lakh or 100,000. Okay. The reason why law is saying that you need to calculate depreciation is, you purchased an asset for 100,000 rupees. You are saying the life of the asset is 5 years. Okay. So that means every month you are charging a depreciation of 1,666. So from a law perspective, every month you are charging depreciation of 1,666. Every month you are doing that, and every month you are putting this particular money aside. So that means at the end of the 5 years, you will have the total 100,000 money, okay, which is set aside in the form of depreciation, and that particular 100,000 you can use to purchase the same asset after 5 years. Again, you can ask a question, that is what law says, but practical challenges would be, after 5 years, do you think that the asset value will be same 100,000? It could be more than that, it could be even less than that. It could be say 150,000. Say today you purchased a building for say 100,000. You say that life of the asset is 5 years. After 5 years, you are saying that the life of the building is only 5 years. After 5 years, you say that the building may be demolished. Okay. After 5 years, if you want to purchase same kind of as a building for 100,000, do you think that you will get the same asset for 100,000? You may not. Similarly, for some other say vehicles also. Today the cost of the asset could be 100,000, but after 5 years it could be more and it could be less. But that's a different story. But law says that charge the depreciation so that you will have that particular money left with you, so that after 5 years, when I say 5 years, it is 5 years based on this particular example, you will have that particular money left with you, and you can use that particular money to purchase that particular asset. So that is the concept of charging a depreciation. Okay, now coming back to our discussions like straight line method and written down value method. So as far as the straight line method is concerned, your depreciation amount is same every month. If you go for the written down value method, okay, as far as the written down value method is concerned, you do not mention a kind of a life, you mention something called percentage. You say that every year this particular this asset will get depreciated by 10%. And again, whether who is going to decide that the life of the asset will be depreciated by 10 years or 10% or 5 years? It will be decided by the law and corresponding concerned engineers. And even the law also prescribe these years based on the asset, based on the life of the asset, and they will also do a consultation with the corresponding engineers. Okay, so in this case for 100,000 asset, you say that it needs to be depreciated every year by 10%. So on the first year, the depreciation will be 10,000 rupees. And at the end of the first year, my net book value is nothing but cost of the asset minus depreciation is 90,000. This is my net book value. And second year, you charge depreciation on again 90,000 with 10%. So second year depreciation is, this is first year depreciation, this is second year depreciation is 90,000. So my net book value at the end of second year is 90,000 minus 9,000, 81,000. So this is the net book value at the end of first year. This is the net book value at the end of second year. And again, in the third year, you calculate depreciation on this by 10%. So your net book value at the end of third year is 72,000 and so on. So this method is also called return down. This method is also called net book value method calculation, or this is also called return down value method calculation. Return down value. You are calculating depreciation on the reducing value or return down value of the method. This is also called net book value method calculation, return down value method calculation, reducing balance method calculation. So on the reducing value of the asset, you are calculating depreciation. So here at the end of the first year, your value of the asset is 90,000. So your depreciation calculation is on 90,000. So here at the end of the second year, that is the starting of the third year, your value of the asset is 81,000. Your calculation of depreciation is on 81,000, not on the 100,000. If you go with the straight line, just at the start of the year, you have decided it's a 5 years and it will be constant. It's the same month throughout your 5 years. It will be the depreciation value will be same. So this is the straight line method, and this is the return down value method or WTV method or NPV method. Any questions here?
Yes, Arvind, just to understand, in a particular organization, can I have both these methods for a single corp book, or can I maintain with multiple corp books also under same organization?
Okay. So in general, under same organization, okay, you will not do a calculations of depreciation on different methods. You can have one depreciation method, that is a straight line method for the corporate book, and return down value method for the income tax. So even in India also, generally your corporate book follows straight line method. Your tax book follows the return down value method. But within the corporate book, you will not have two corporate books, and under one corporate book you do a calculation based on say 5 years, and another corporate book you do a calculation based on 3 years, because that is not required, and law does not even ask you to do that, because one corporate book is per country, and per country it is governed by one particular law. So generally your depreciation method will be same per corporate book, and it could be different for the tax book, or it depends, like for the tax book also you may have the same depreciation method but different in the life or different in the rate. Okay, so in 90% of the case the scenario will be something like, for this particular asset in corporate book I will use the straight line method, for the same asset in the tax book I will use the return down value method. This will be the scenario in most of the cases.
And again, typically from the implementation perspective, right? Uh, how do we place our questions? Like, what is the best method to define for my
No, that's
corporate
what I'm
book?
saying, like,
And
this is not an implementation consultant decision. Whether you want to go for straight line method or return on value method, it is the business decision, and it is as per law. You need not break your head. If they say that we are working in a different environment and we do not even match your straight line method and return on value method, we want some kind of a custom method, then they will be providing the details to you, and based on that you need to build up your own custom logic. Okay, so this is not exactly an implementation question. The implementation question will be something like, as part of my data migration, give me the list of all the details and their corresponding depreciation method, whether you're using straight line or return on value method, and how many, and whether you want to go for corporate book as well as tax books, or whether you want to go for only corporate book, something like that. So these are the questions, not like what is the life of the asset, what is the depreciation. They should not, they will not be asking us questions like, this is my asset, can you tell me like what will be the value of the what will be the depreciation rate, or what will be the life of the asset. So those are the answers which you directly get from the business users.
Okay.
Okay, so these are the main two methods. So I have in my training or in my BR100, I picked up two examples. One is the Reliance NBV method and another one is the Reliance straight line method. So I'll show you Reliance NBV method. Setup depreciation methods, that's the navigation. Setup depreciation methods, F11. So first we'll add created this REL underscore NBV. Did I create or not? Okay, maybe I think I did not create. You can create that. Description is Reliance NBV method or return on value method. Method type, again there are different permutations and combinations based on these method types. So method type should be flat, and calculation base should be NBV, net book value. Okay, and what else? And percentage. So click on rates, click on, there is something called basic percentage and adjusting percentage. Generally if I say basic, generally we go for basic percentage of 10, adjusting as 0. So here you can say adjusted as 10%. So this is what we can see in the screen during a data entry. So if I say, what is this adjusting? Adjusting is nothing but a kind of a surcharge. So if you know, like in income tax, surcharge is the tax on the tax. So similarly adjusting is a percentage on this particular basic percentage. It's like additional charge on the basic percentage. So if you, here I mentioned 10%, if I say adjusting percent as say 10, so you can see total adjusted percent is 11. 10% plus 10% on this 10%, which is giving you total 11%. If I say this adjusting percent as say 50, then this will be 15%. 10% plus 50% on 10%. 50% on 10% is 5%. So 10% plus 5% will be 15%. If I say this as 0, just I don't know why Oracle has given this particular functionality. If you want to really go for 15%, you can straight away enter the percentage as say 15% and adjusting as 0. Okay, so you can have any number of percentages here, 15%, 10%. Okay, and then during a data entry, when you select this particular depreciation method, okay, in the drop down it will give you these two percentages, because there could be some assets wherein if it's a land and buildings, say it could be 15%. If it's a furniture and fixtures, it could be say 10%. If it is something else, if it's a computer and software, so generally I remember, if I remember correctly, for computer and software, I think it was 60% as per Indian law. I mean, that was a while ago. So similarly, you can have different percentages.
Arvind, what is the actual scenario? I mean, business case where we wanted the basic adjusted and adjusting. Is
That's
there
what
any
I'm trying to
specific
say.
reason?
That's what I'm trying to say. Even I never come across any kind of situation wherein they were using that. I mean, as I said, like if you really want to use that, so 10%, and then one option would be like 10%. Yes, already existing. Say, take an example. This is say 20%, and if I say 50%, it is actually coming to 30%. You can very well create a basic rate with 30% with an adjusted percentage of 0. So I did not come across any kind of a client who is actually really using that, but that is the functionality.
Okay. Okay.
because you can achieve the same thing in a different way, 20%, then adjusting 50%, or directly enter 30%. And if you go for, there are different kind of method types. There is something called formula, production, calculated table. There are so many different permutations and combination based on these things. But as far as the netbook value is concerned, your method type should be flat and calculation basis should be NBV, because you want to calculate your depreciation on the net book value of the asset at the end of the year. That's for the NBV. We will also create straight line. REL, STL. STL stands for straight line. Reliance straight line method. And method type is calculated. So if you ask me like how do you know whether it should be calculated or flat, because it is based on the testing. And calculation base is cost. It's cost. And what else? And as far as the life and months are concerned, you can just say 1 year. Save this. You need not mention any kind of a what you call rates, because as I mentioned, this is straight line method wherein you specify only life but not the rates. Okay. Okay. So we have completed the depreciation methods, and next thing is now completing the. Okay, there's one more point I think I missed out. Prorate conventions. Let me go to the prorate conventions. What is the navigation setup as a system prorate conventions? Reliance fiscal year. Yeah. So this is our prorate convention. So when you are creating a prorate convention, again click on plus and create your own prorate convention and related to your Reliance fiscal year. So what is the prorate convention? Okay. Different countries have got different laws as far as the date placed in service is concerned. So what is date placed in service, and what is this prorate convention? So throughout our training session, I'll be using this word DPIS. So DPIS stands for date placed in service. Okay. When I'm creating an asset today, okay, today is what, 8th of October. When I'm creating an asset today, I can very well say that my date placed in service for this particular asset is 1st September 2017. So that means I am saying that even though I'm creating an asset today, I purchased that particular asset on 1st of September 2017, but for some reason I did not enter that in the system. I want system to start calculating depreciation from 1st of September. So that is the significance of date placed in service. So as far as the calculation of depreciation is concerned, system will always check what exactly is the date placed in service. It will not check on what date you have created the particular assets in the system. Okay, it is like a kind of a date which will be used by the system for the calculation of depreciation. So even today also you can create an asset, okay, with a date placed in service as say 1st of January 2017. So what system will do is, obviously you may ask a question like, how come I can put a date placed in service at 1st of January 2017, and when system start calculating depreciation from 1st of January, all those periods are already closed. Now we are in October, and October is the only period which is open. Then how does system calculate the depreciation and charge that? So what system does is, if October is the current open period, and if you are creating an asset with a date placed in service of 1st January 2017, from 1st January to October, for all the 10 months, the depreciation amount will be charged in the current month itself. So let us assume for this particular asset of say 100,000, every month the depreciation is, say example, 1,000 rupees. So as far as the October's month is concerned, the depreciation amount will be 10,000, 1,000 into 10 months. And from November onwards, the depreciation amount will be 1,000, December 1,000, and so on. So this is called catch-up depreciation. So system is catching up the depreciation whatever system has calculated from January 1st to current month. Let us assume you created the asset with the date placed in service as normally say 1st of October. If that is a scenario for October also, it will be 1000, November 1000, December 1000, and so on. There is no catch-up depreciation because depreciation calculation is based on this date placed in service. Okay, so that's the one point. So that is the significance of date placed in service. And next thing is depreciation calculation is dependent on something called prorate date. Okay, and this is the prorate convention which we have assigned to our ledger, FA ledger. Okay, so prorate convention. What is the prorate convention which system uses? So in this example, my prorate convention name is following month. If I add an asset between 1st of April to 30th of April, whether I add an asset on say 1st of April or 5th of April, 20th of April or 30th of April, system should start calculating depreciation only from next month. There are some laws which says that. Take an example in India, as per Income Tax Act, when you are using something called block of assets, our Income Tax Act says that all the assets added between 1st of April to 30th of September should have depreciation calculation from 1st of April. All the assets which are added between 1st of October 2017 to 31st of March 2017 should have a depreciation calculation from 1st of October. So it is called 6 months concept. That is what your Indian income tax law says, that any asset which is added between 1st of April to 30th of September, you add the asset even on 30th of September also, you are eligible to claim depreciation from 1st of April. So that means you are getting benefit of 6 months. Even in this example, if you create an asset even on 31st of March also, you are eligible to claim depreciation for 6 months from 1st of October onwards. That is what your law says. If this is the scenario, okay, my prorate convention says that from date is 1st of April, to date is 30th of September, then prorate date will be 1st of April. Okay, from date is 1st of October, to date is 31st of March, prorate date will be 1st of October. Prorate date is nothing but the date from which you want to start calculating depreciation. Okay, I did not use this particular example in my prorate convention. In my prorate convention, here the example whatever used is, if I add an asset between 1st of April to 30th of April, you should start calculating depreciation only from first day of the next month. So whether you add an asset on 1st of April or 30th of April, your depreciation should start getting calculated only from 1st of May. Add an asset on 1st of May to 31st of May, your depreciation calculation should be only from 1st of June. So this is called following month concept. If you create a prorate convention by start of the month concept. So when I say start of the month concept, what will happen is, my start date is 1st of April, 30th of April is my end date. That is any asset added between these dates. My prorate date will be 1st of April. For this row, the prorate date will be 1st of May. And if you go for something called midday concept, mid-month concept, for this, your prorate date will be, in any idea what will be the prorate date? The name itself says mid-month.
15th April.
Exactly, 15th of April. So in this case, it will be 15th of May. In this case, it will be 15th of June and so on. Okay. Again, this is as per different law. So in our current client, we are using following month. In India, you use that 6 months. In some countries, you use mid-month. In some countries, you use start of the month. It all depends on your law. And in some in some countries, you even just go by days. So if you go by days, in the sense like if the asset is added on 1st of April to 1st of April, your prorate date should be always 1st of April. 2nd of April to 2nd of April, prorate date is 2nd of April. So that means you are calculating depreciation exactly on the day on which the asset is added. So that is called day. What do you call your regular day convention?
So Arvind, if it's a regular day convention, should we add 365 lines in here?
Exactly. Yes. Exactly.
Mhm.
You need to do that. But the good thing
Okay.
with this particular form is if I press a down arrow, what I did is I just created first row, okay, and then press a down arrow. So when I do a press a down arrow, automatically it is creating those records. So for 365 rows, it will hardly take you 5 minutes.
Okay, okay.
Okay, you need not worry that why should I create so many different things. Just create first row and just press a down arrow. It will automatically, it will understand. Looking at the first row, it will understand that yes, for the second row also, for the first row you are saying 1st of April to, okay, maybe I'll just create one example. Daily, I will pick up some other fiscal year instead of our Reliance fiscal year. I'll pick up something else. See, I'm just pressing a down arrow. So for 1 year, I should be able to complete within not even 5 minutes. I think just hardly 2 or 3 minutes. Okay.
Yeah, I got it. Yeah.
Okay. Okay. So the reason why I explained now this particular pro rate convention is, again, this particular pro rate convention is also used in the asset category screen. So in the asset category, we use pro rate conventions. We use the depreciation method. So that's the reason why I explained those things. So the last setup before we get into the data entry is the asset category. So setup, asset system, asset category. So in this asset category, what we are doing is, it's a bit tricky. Do not create any asset categories here. Asset categories are already created in the system. Okay. We will take an example of say computer percentage. Okay. If I want to create a new row here, click on place. So click on this drop down, select the major category and minor category. Okay. For a category of say, in our current example, we want to take control F11. We want to take an example of say computer software. Okay, computer software. So bring up that particular category, put your cursor here. Okay, click on, see, the same category is used across so many different FLHs. Okay, so put your first bring up this particular category, put your cursor here, and then here you can see that there is some ledger by name ADBS which is already created. Press down arrow. You are able to see all the ledgers which are created here. Okay. Now we want to create the same thing for our Reliance ledger. Okay. Go down arrow. I think for Reliance I had already created. Okay, I had already created for Reliance. If this row is not there, click on plus button and then you should be able to create for Reliance Corp. Okay. Enter Reliance Corp book name. Okay. And then enter different details like asset cost account, asset clearing account, depreciation account, accumulated depreciation account, bonus expense account, revaluation reserve, CIP asset, and so on. Okay, I'll get into all these details when we do once we do a data entry. When I'm doing a data entry, I'll explain you journal entry. When I add an asset, the journal entry will be asset cost will be debited and clearing will be credited, and these two are being picked up from here. When I do a depreciation calculation, depreciation account will be debited and accumulated depreciation will be credited. These two are being picking up here. When I add an CAP asset, I'll explain you what is CAP asset. CAP asset will be debited and clearing account will be created. So all these things are being picked up here. Okay. So apart from this entering of this ledger account, you need to click on default rows and rules, and you need to specify the depreciation method. So what is our depreciation method? Reliance straight line. Click on life. Okay, if you remember, the for this particular Reliance straight line method, we have created life as 1 year. So select that particular life of 1 year, and also select the prorate convention, retirement convention. Prorate convention is from when system should start calculating the depreciation, following month. That is what we have created. So that is the prorate convention, and for retirement also you have to use the same logic. So you are selecting that. Save this. Okay. Now we have one asset category, wherein for that particular asset category we have completed the accounting part as well as the other parts. That is your default depreciation method and conventions. Now we should be able to add an asset for this particular category.